Is the housing market about to flip? Some property experts are saying prices could tumble 15% after rate rise increases take bite. Housing intentions of home buyers, especially first home buyers, have completely dropped and plummeted after the RBA's recent announcement, and even affordability is set to worsen as these rate rises take bite. So the question is Australia's latest housing boom going to turn into a housing bust? If you're thinking about buying a home this year, if you've got friends thinking about buying, if you're wondering what's going to happen with the market, we're going to cover it off in this video. We're going to go through some of the headlines, try and cut through and see what the market has done in the past, what it potentially is going to do, and we're going to, more importantly, go through a couple of tools that are going to help you break down your local area. You can get a sense of, for some of these headlines, they're pretty high level. This is going to go, we're going to go suburb specific, and give you the ideas, the practical ways of cutting through some of this stuff. So let's break it down. Starting with this article, home buying intentions have apparently recently plummeted as a lot of home buyers are getting kind of freaked out by some of the rate rises actually potentially being forecast, and saying the amount of home buyers has completely dropped. I think the drop in home buyer demand has further to go as interest rates are just starting to rise when affordability is worsening, said Shane Oliver, AMP's chief economist. So I guess the question is, Nathan, what are you seeing across the market, and what you're actually finding with home buyers out there on the grounds?
Yeah, I think in that report there, Jaden, we see that home buyers' intention is definitely reducing. Look, on the ground level, we are seeing some home buyers starting to find that there's not as much competition, and it's certainly getting a little bit easier. Now, it depends on the area, because there's some areas that are still booming, but areas like Melbourne and Sydney, they're certainly starting to find that they've got a little bit more time to think about the property. It's not going to be sold that weekend, and they can sit down and take their time to understand if it's the right property for themselves, and they're not having to go unconditional anymore. So they're getting a bit more ability to put in clauses. So we're seeing a shift from what was traditionally in the last sort of 2 or 3 years a real seller's market. We're starting to see it move to a more of a buyer's market.
And if you stick around to the end, we're actually going to break down where all the different markets are. We're going to go state by state, market by market, to find out if you're in a buyer's market, a seller's market, and potentially how to approach that. But yeah, equally, like you said, Nathan, I guess it always is city specific too, because in Brisbane, I'm still finding it's pretty hot, whereas in Sydney it's probably less so. What sort of terms are you kind of finding are working at the moment?
Yeah, definitely. We're still seeing it, as I said, previously buyers had to go on with unconditional terms, really had to be quick. If you went to the open home, usually the first or second open home, the property was pretty much sold. What we are starting to see now is that property's not moving as quickly, and we're actually seeing a bit more stock come on the market, which gives a lot more availability and choice for our home buyers out there. And one thing we always talk about with our home buyers is the fact that it's not about trying to time the market. Now, whilst things are cooling off, when the COVID first happened, all the industry experts were actually saying the market was going to crash by 20 or 30%. Now, the exact opposite happened. If you bought 18 months or 24 months ago, you'd have seen that increase in property value, 20, 30, 40% increase that we've seen. So it's not about timing it, because timing is really hard to get right. And you're only going to know if it was a right time in hindsight. Hindsight's 2020.
Yeah, so the big difference, I guess, from what we're seeing with some of the markets is got to do with the stock and so supply and demand. So as we saw during COVID, the market got tight, people sort of stopped moving, they were staying at home, there were less properties for sale on the market, but then equally there's more demand because people are like, well, I actually need more space, I need a yard, I've had kids, things are changing, and it caused a bit of price pressure. So a really good tool to kind of check out this is SQM Research. They do a bunch of different data points, but this one particular shows total property listings. So as you can see here in Paddington, the suburb that we're in, at the moment, the sort of stock on the market still historically is actually pretty low. It's sort of going back to 2015, 2014 sort of times, and there's a lot less properties on the market, so it means there's a lot more sort of potential buyers, and it's still fairly competitive. On the other hand, as you can see, like in Sydney, for example, the stock on the market is sort of making its way back up, and it's kind of definitely not as flat as you saw in Brisbane. And that's why in Sydney, you're reading all these headlines of doom and gloom and the market's going backwards, and the reality is it's just not going up at a crazy pace. Like, interestingly, Nathan, it's amazing, with the headlines, Dad on the weekend, I think it's last week, the weekend before last, when the public holidays, like, oh, the auction clearance rates are down, the market must be tanking, things are going all bad, but the reality was, like, Dad, it was public holidays. And it caused people to go on holidays, they're not buying as much. So I think sometimes you've got to sort of break down from those headlines and look beyond it.
No, 100%. And as I said, when COVID first hit, all the experts, all the those industry pundits were saying things are going to crash, they're only going to get worse. So what we find is bad news moves quickly, it moves fast. It seems to resonate. Yes, the market might crash. We talk about property as a cycle. So we know it goes from a boom to a bust and a recovery. And that's why we always talk about being in the market for a long period of time rather than a short period of time.
Yeah, this is an awesome chart to display it from matuzik.com.au. Shows the property market, mostly Sydney actually, with some of, the early in 1886 was the only data they had. But anyway, as you can see here in previous times, in 2011, when the GFC happened, we had a money boom in Australia, so property kept going up. But there's been times where property's just gone sideways and it hasn't necessarily kind of gone up in real terms. And that's potentially what might happen for the next few years. Like we've had incredible growth. And as you've seen through other periods, like after this growth in the 50s, obviously a fair while away, but it kind of went flat for almost a 10-year period and only started to go up from then. So I guess to Nathan's point, it's sort of time in, not timing.
And I think the other thing to keep in mind is in the last 18 months, we've seen in some areas a 30% growth. So that growth is simply unsustainable. We found a lot of home buyers that were actually priced out of the market. The property prices were growing quicker than their ability to save a deposit. Now that wasn't good for anyone. Even if the market does start to slow down, it's going to be a good thing for those home buyers out there that have really struggled with that affordability piece.
Yeah, and that brings us to the next point. Trying to work out where we are on the property clock and your market, because really where you're looking at buying and the type of market that you're buying is going to shape how you need to approach it. Like if it's a sort of seller's market, you're going to have to be pretty quick and get in there because there's going to be lots of other offers there. If it's a buyer's market, then you might be the only one looking at that house and you're going to have more opportunity to negotiate. So if you jump on Heron Todd White's website, they've got their month in review, so this gets updated every single month. It's pretty amazing. If you download the property clock and the property report, Nathan, you've got it down on the computer. Let's walk through it.
I do indeed. So yes, you can get this absolutely free on the Heron Todd website. It talks about property going through a cycle. So we talked about it before. We get a peak market where the market's at its height, it declines, and then it bottoms out, and then it starts to recover. Now they do say that this cycle is, a 7 to 10 year cycle, and that's where we talk about not timing the market. It's all about the time you are in the market, because more of these cycles you can get in, that more upward trajectory that you generally find. Now this is high level. It is different from suburb to suburb, state to state. But as we can see here, a lot of the country is in either a rising market, approaching the peak, or at the peak. We've got Southern Hills that's really starting to decline. So at a high level, we can see we really are, in a lot of cases, at the top of the market. And as such, these headlines are really talking exactly what's going to happen next, which is where we start to see the decline and where the market will approach the bottom and bottom out. It is a little bit different with units. Same sort of a thing. We still have a few more in the recovery phase, most rising and peaking.
Yeah, so like you can see from that report, for example, Sydney approaching the peak of the market, you're going to be able to potentially negotiate better options. You're going to be able to, like Nathan said, instead of going unconditional on your offer, you might be able to make an offer subject to finance, or there might be less buyers. But in Brisbane, Perth, Adelaide, where it's still a rising market, you still need to be sharp. Like the headlines aren't actually accurate in that case because it's still very competitive. Prices are still getting pushed up. There's more buyers, and that's just how it is.
And I think the thing to keep in mind is even this report here talks quite generally. So Brisbane, that's quite a large area. There's a number of suburbs in there where one suburb might be booming and the other one might not be. So getting on the ground, going to the open homes, you'll start to see what's going on there.
And then so back to what we originally promised at the beginning of the video, the property price tumble. This article from Sydney Morning Herald featuring Shane Oliver, Chief Economist at A&P Capital, saying dwelling prices in Sydney and Melbourne could fall from their peak earlier this year by the end of 2023 to end of 2024. They're talking about how rate impacts are going to affect people and it's going to push up the cost of the market. I think the thing I'd say to this is that no one has a crystal ball. Interestingly, I had pulled up another article from Shane Oliver that was done at the beginning of COVID 2020. Coronavirus pandemic could see house prices plummet by 20%, economist warns. They could reach, he was talking about potentially unemployment hitting 10 to 20% in this article. It'll shoot up to that. could result in drops to property price markets, 20% in Melbourne and Sydney. And this is before COVID, since everything else has happened. So I think the thing I'd say with these headlines, these economists, as we said in other videos, they actually couldn't forecast the next footstep, unfortunately. So it's best not to kind of read too much into this stuff and to run your own race.
And the other thing to keep in mind, whilst we see rates increase, so interest rates increase, we're also starting to see a squeeze in the rental markets where, Jaden, you were mentioning previously that people are starting to line up for rental properties to try and get in. So what are we seeing there as well?
Yeah, so even on rental listings, especially particularly in Brisbane and Queensland, the data even shows it, showing this again is Paddington where our office is, but rental properties are obviously very tight compared to 2016. It was taking almost kind of over 30 days to list out properties, whereas here it's kind of under 30 days and stuff's moving very quickly. So I guess that's also the other thing to consider. Like if you're wondering, should I buy this year? Should I wait for the property market to crash? I've got a couple of mates that say that, and they've been waiting for the last 20 years because it hasn't happened, and it's looking unlikely to happen looking at the data because the market's obviously very well regulated. There's not a lot of supply. The cost to build a house is astronomical at the moment. You can't get trades in. In Brisbane, we've had floods. Obviously, property's been knocked offline. It's the same up and down the coast, on the east coast as well, with the fires last year and stuff in Sydney. So what's the alternative? You're either going to rent and live, and it's not easy to rent.
And I think that if you're thinking of buying and looking in the market, you're not sure where to start. Well, a good stepping stone is we've got a 7 steps to researching for a house or a property that you might be interested in. And if you go on our website, absolutely free content. You can get a really good idea on what to do, where to start, how to research, and get a really good understanding of the marketplace. So guys, that's pretty much it for today. We are mortgage brokers. We're based in Brisbane. We do deal with people Australia-wide. There's absolutely no cost for the service. So if you're looking for a mortgage broker, we can help. Simply call us on 1300 088 065 or visit us at huntergalloway.com.au, and we'll see you next time.